Welcome back to our city, where we're with Tom Duffy and Joe Leone talking about how to manage your money. And the second segment is going to be talking about managing your money in difficult times. Thanks for staying with us. And one of the questions I want to start off with is emotions. People face job loss, they face loss of revenue, and then you guys go in, or your team goes in, or somebody you work with, and it says, hey, how do you help? How do you deal with the emotions?
Well, the hardest part is really trying to get people to calm down a little bit, take a breath, and let's get through this. That yes, it's very upsetting. It's very hard to go through it in the beginning, but let's not make decisions based on anger and high emotion. It's not a good idea.
And what are some of the immediate things people should do?
Well, some things will immediately change. For instance, you might be having to change your health insurance. You might need to look at other life insurance. So some of the benefits that you were getting from your company, you have to assess and look at how you're going to cover that now. So that's one thing you should look at. And the other is to just take a minute, as Tom said, and just assess where you are. What do you have saved? What are your bills on a monthly basis? A lot of times when people are working, they're not concerned what their bills are. They're not worried about budgeting. All they know is at the end of the month they covered everything. But it's really a good time to just sit back and just say, okay, what do we have and what are we spending?
Like if you get the newspaper delivered, that's got to go, right? I mean,
yeah, there are certain things that people have to go. Eating out, they just have to be more, careful with how they're spending money. And it goes back to really the budget or the spending plan. I call it a spending plan, but the budget's a bad word for me. Mm-hmm. But a spending plan to understand, are you spending money you don't need to spend, especially now if you're facing a job loss.
Tell me the nuance between a budget and a spending plan, since you raised that
well,
topic.
A budget is like control. It's kind of like a diet that obviously doesn't work very well for me. But a spending plan is, I know how much I'm going to spend on gasoline, on groceries, on maybe a little bit of entertainment. A spending plan, that's a plan for the year. I'm in control of that. A budget is more like somebody's putting their arms around me and preventing me from spending money.
Okay. And Joe, how do you determine if you're eligible for unemployment insurance? And how do people apply for it? A lot of people probably don't even know.
Yeah, and they made it very easy to apply for, but your eligibility is based on how your employment ended. So if you were laid off, or the job doesn't exist anymore, typically most people are going to qualify for unemployment. But there's a very easy website. Department of Labor website is where you go, and you can actually go online and file a claim right online without going to an office, although you can if you want. But typically, it really makes sense to use the website. The website's great.
And do you have to show up anymore to get your checks? I mean, I know I'm getting off the message, but do you got to go there every week?
No, actually you can claim, in the beginning you're usually claiming your checks once a week, and they're asking you questions, are you still looking for a job? You want to be trying to find a job, of course, when you're on unemployment, because that's part of what they're trying to see, is if you're actively seeking employment. And actually the website now, once they figure out what your background is, they actually send you job openings. So they're really trying to be helpful, but then after a while, you'll file online every 2 weeks to get your check. So they've made it really easy.
Now, severance package is something that is pretty common in the last 2 years, 3 years. And the employee says, here's going to be your can they negotiate for higher severance?
Well, it depends on the circumstances. It depends on what position they had. It depends on the firm. If the firm was going out of business, it's unlikely there's going to be much negotiation. I kind of shy away from having the employee negotiate directly. Again, going back to the amount of emotion that's involved here. I like people to seek out counsel, whether it's from an employment attorney. Get some objective advice as to whether or not you should negotiate, because you might end up putting yourself in a worse position. And a lot of things, they're negotiating on dollars. Maybe they should be negotiating on benefits.
Right.
They'll extend their health benefits for a little bit more, provide some job retraining or some outsourcing or some other benefits that may actually be more valuable in the current situation than just cold hard cash.
Yeah, and the planner's better off trying to help them assess what they're giving up and what they have. But I agree with Tom. I think if it's going to get into a negotiation, it's really something that they might want to bring somebody in that's a professional attorney to do that for them. Because you want to make sure that you're negotiating the right points.
Usually, an employee, is there a question an employee should ask? I mean, is there any tax benefit to having a severance deferred, or is it all up front, all at once? Is that the best way to get a severance check?
Well, typically, from the company standpoint, the best way for them to give it is all up front. Okay, because then administratively, they don't have to worry about it anymore. They write you one check, and then the administration goes away. But I would say from the employee standpoint, it makes it a lot more difficult to figure out your spending plan. If you get a lump sum, you might start spending money on things that you don't need to spend it on. So I would be, I would rather have a monthly payout, but I think that's part of the issue. Is just easier for the company to write one check.
We were talking about financial planning before, and especially in times that are tough. A lot of people think financial planning is strictly for retirement, but in this economy, it shows that financial planning is not only for retirement. Maybe you could talk about some of those issues, Tom.
Sure. It's absolutely about a lot of more things than just retirement planning. We look at income tax. I look at cash flow. Again, the spending plan is big. When I start with a client, I talk about spending. I want to know, how much money do you spend today? Because chances are that's how much money you're going to spend in retirement, adjusted for inflation. So I want to know all those things. We look at the risk management plan. We want to make sure, do you have health insurance? Do you have enough auto insurance, homeowners, life insurance, all those types of things. We put all those things into the mix. That's a real comprehensive financial plan. Estate planning. Do you have a power of attorney? Do you have a will? All those kinds of things. Some of my clients, I even talk to them about their career planning. I ask them, when was the last time you updated your resume? Are you building your network so in case you get outsourced or out of a job that you can pick up the pieces pretty quickly? So financial planning really addresses a lot more.
Yeah, sometimes we're psychologists more than numbers guys.
That's probably helpful.
Yeah.
Nonprofit organizations can also help consumers with credit and debt management issues. How do you look and find the right agency, or do you guys recommend, from your business, do you recommend even a nonprofit agency?
Well, I think the best way to go is a nonprofit. I think there have been, especially on the credit side, there has been some concern that not everybody out there that's a for-profit business is there for the best interest of the client. But through the National Foundation of Credit Counseling, you can find some local people to help you, and I would go that route first, as opposed to going for a for-profit person.
If you hear about it on the radio, if it sounds too good to be true, it probably is.
Right.
Okay. There's no free lunch.
No.
Yeah, and nonprofit organizations can aid consumers on mortgage and specific questions.
Sure.
But you got to know who you're going to. Should employees reduce or cease making retirement contributions when it gets really hard out there?
That goes back to the spending plan.
Yeah.
I mean, if you can keep making the payments, the contributions to a retirement plan, keep doing it, because again, you're saving for the long term. But if it comes down to making your rent or your mortgage payment or putting food on the table versus savings, you got to put the food on the table.
Yeah, but don't make the decision and just drop the savings until you really know the spending plan and know what, as you said, maybe the paper delivery goes away, or maybe we're not, having HBO and Showtime on the box. But look at those things first. I wouldn't look at retirement as the first thing I dropped.
And penalties for employers and employees face for borrowing from retirement plans. Mm-hmm. If you borrow from it, you got to pay a penalty, a tax penalty?
You don't pay a tax penalty for borrowing unless you end up going off roll. You end up not being employed anymore. Then you either have to pay it all back right away, or it becomes a taxable event. So there's no penalty for borrowing the money. It's just you have to pay it back.
You can deal with the IRS.
Yeah, if you have a 401k plan or retirement plan with your company, you are allowed to borrow against it, and basically you're paying yourself back. So there's no penalties there. But as Tom pointed out, the difficulty right now is what's happening is people that have taken loans against those 401k plans, now they're getting laid off. So if they get laid off and they can't pay back the whole part that they borrowed, which they probably can't, now it's going to be an income taxable event and potentially a penalty if they're under 59 and a half. So that's why we always try to advise clients, don't borrow against your 401k plans, because in today's economy especially, but in most any economy, you really don't know when you're going to lose that job, and you're trying to put this money away for 20 years from now. Don't borrow against it now, unless it's.
Gentlemen, I want to thank you for taking the time to be on the show. I know you're going to come back in a couple of weeks, and we're going to talk about young people and their efforts on what they can do, and I appreciate all of your time. So see you in a couple of weeks.
It's our pleasure. See you in a couple of weeks.
For Joe Leone and Tom Duffy, I'm Chris Bolwage. We'll see you next week on another edition of Our City.